everybody? Welcome back. Subscribe, click all notifications. These videos all link together that I do, including with my Substack reports. You saw me break down the sector drop here on the NASDAQ this upcoming week or this previous week here. I called this out here on TradingView, Substack, Twitter, X, Swap, and so forth. I also warned people here on a Substack as well, Discord, Twitter, about the Samsung strike that nobody was talking about. And now we're here. Now we're here in a position to where a lot of people are now actually starting to look at my videos and be like, you know what, maybe this guy actually knows what he's talking about. Maybe these people who kept saying go long, go long, go long, right? And then people basically full ported at the end of Friday saying, I think this dip is going to get bought up. Right now, these people are starting to tune this video, so I'm feeling a lot happier, a lot more positive about kind of the work I've been putting out. Some people respect it, and I appreciate those that tune in and watch those videos. I also recently put out a 120-page Substack report here that can be found on WAP right over here. It's the Operation Point Blank here. It's free. It's 120 pages here. I definitely recommend that you guys go and get it here. Operation Point Blank right here. It's 120 pages, free for download right here. Not going to click it, but that's free. That's for you guys here. 120 pages, the largest one I've ever put out in my entire life. So we're going to get right into it here. I have my slides that I'm going to be going over as well, so you got to stick with me. I really don't like doing YouTube videos. I used to editing, the cutting, all that stuff. So you kind of hear, you got to sit through my rambles. You also have to kind of sit through. This is also raw and unedited, which is also why I don't like it. But we're gonna get right into it. So here on the weekly, we have just a clear evening star reversal pattern. If you're not familiar with what an evening star reversal pattern is, it looks like this. Okay. So this is, and it's not perfect. All evening star chart patterns aren't the same, but it's pretty clear. So right here on the NASDAQ, right, we have a clear evening star chart pattern here on the daily, okay? We also close what looks like below our 55 EMA here. Let me just go ahead and confirm that. Okay, no, that's not true. We close below, or is it a 20? One of the two. It doesn't matter. We have our evening star reversal pattern here in progress. And what I really want to see here for follow through is kind of like coming off like a 3 black crows chart pattern here. I'm not saying that the levels have to go all the way down here, but that would certainly be generous for me because I'm short. And usually when you have these patterns, you kind of, after that third candle, you usually get like a bullish engulfing candle. It actually kind of looks like that sometimes. What I really want to focus on though is, and we'll just mark out our levels here. So levels to watch here this week for the NASDAQ, are we going to undercut 29,049 here? I think the low here is 25,055 here. Are we going to undercut that here, right? Or are we going to bounce off? Or are we going to double bottom here and kind of bounce off support, right? So you can kind of see here in the past, do you undercut? Yes. Test, retest down, kind of rip up here, right? On the ES here, it looks like we can possibly retest at 7,400 level, but obviously we're looking for a breakdown here as well. There was some interesting news that kind of came in over the weekend that I posted here as well on Substack. It looks like Bitcoin, again, I apologize. This is raw and unedited. This is annoying. I don't know why. I don't want to be on this page. Bring me to my homepage, please. Bring me to my post. It looks like Bitcoin also broke its 14-year support level and what that means for the market. Shout out to whoever gave me this chart or had the chart online, crypto something. Appreciate the chart. And I don't want to talk in this video. And I have like candidly kind of like some notes here that I'm trying to go over. I kind of just want to tell you what's going on here and kind of just talk at the top of my head, just first like reading some generic theme that a lot of other people do, because that's just not who I am, which is also why I don't like recording some of these videos. What I think here is that you have a trap. I think that Trump went to China, okay, and I think that he brought all the world leaders to basically tell them, hey, fuck faces, this is what's gonna happen here. We're gonna fucking nuke the fuck out of Iran, okay? And then also, like, you guys want to do some trade deals, okay? And also maybe like, hey, maybe let's open up some exports, right? And maybe let's also try to tank the market here. We're going to give you a heads up here. Not only that we're going to nuke Iran because they're not doing shit, but also like, hey, man, if you guys want to kind of get out of the market right now, like, this is kind of a peace offering. You know what I'm saying? Like, that's just a full tinfoil hat. That just makes the most sense to me. It's just very odd and strange that they went to China. Like really nothing actually came out though. Like really nothing came out. You know what I mean? They brought Elon Musk. They brought like basically the Mag 7. That was crazy. And I'm gonna go back over here to my slides here. So here's your levels here to kind of watch. Are we gonna undercut ES, the Nasdaq right here? Are we going to also undercut ES here? I think the answer is yes. You're gonna take a look at Bitcoin here real quick. You have like an inverted hammer right here on the monthly. Let me go here to like the 4 hour to see what's going on here. Not great. I mean, you kind of just have like a head and shoulders here, left. You have your head. You could argue like this is your kind of entire right range, but I kind of look at it differently. I'm just going to put on and slap on my fibs here. Just grab the top here from this kind of range here. Not saying it's perfect, but that's just what works for me. I'm really not going to be looking at Bitcoin again until like it takes over $100,000, right? That's just that's just where I'm at, right? It's bearish until that occurs. And so the problem with some of these markets here is like, Bitcoin is kind of known as, right, like a risk on asset. And I don't really think we've been in a risk-on environment. And I think one of the problems I'm having with this entire market is we have a disconnect. You have a lot of YouTubers, you have a lot of people, they keep talking about, how great, earnings are, how great this is and how great that is. I'm like, okay, so how about we talk to the people who are going to basically be paying for some of these products because we have chips and this and that and so forth, right? And so the problem with the market is that basically nobody has money. You keep getting told that, earnings are great, and everyone's like, where's the money, right? You had Bill Gates who just dumped Microsoft, his shares in Q1. He's out, he's done, right? So I'd be very curious to see over the next couple of months, like kind of what happens with that. Are we gonna start to see more CEOs in the market, just dump their shares here? That's certainly not bullish. Why would the CEO, dump his shares? You know what I mean? You do have right here on just off a glance on the Microsoft here, you do have, looks like a bull flag here. I don't need to draw the flag here. I just like to draw that breakout level here. So, right here, I guess if you're going long here, which I'm not going long on Microsoft, here's kind of your liquidity zone here. So you do have a bull flag here. And, what do bull flags do? Bull flags look like this. They kind of go down, retest, up, break out. Obviously, if you kind of break that under level here, you're going to usually get a double bottom or kind of like an undercut and breakthrough. And this all ties back into the NASDAQ, right? Right, on a daily candle here, you have a lot of different trades, a lot of different sequences, a lot of different things kind of going on. People forget that this candle on a daily, right, is made up of all this. So, right, you go to the 5-minute time frame here. Let me just clean off my indicators. You go to the 5-minute time frame here. People forget that daily candle that I just showed you, right? That daily candle here, that's bearish engulfing. They forget that all this structure, all these trades are happening, right? So I think one of the biggest mistakes that traders make when they're trading is like they're forgetting that, like, okay, what happened here on these candles? Was this extremely bearish? Was it just like a straight knife candle, where you might just get a bounce? Or like, was there actual fall through, right? Was there fall through here? Yes. Was there fall through here? Yes. Was there fall through here? Yes. It was a trap after trap after trap. You had a failed inverse head and shoulders. Now you have a possible janky double bottom here, but it looks like kind of based on how Bitcoin kind of dumped over the weekend that, we probably aren't going to get that bounce here. We do have an inverted hammer. We do have a Morningstar reversal here on the Bitcoin. All of a sudden it caught a bid, but right here, no different from what I just showed you online. We do have an evening star in progress with that inverted hammer here, right? So again, sometimes you get those kind of dojis here, red dojis, green dojis. Someone might say red dojis are better, worse or better. Again, I don't like to think that deep about it. I'm just like, okay, you have this pattern forming here. It either is or it isn't. So if I go back over here to Bitcoin, I'm like, I don't need to go long until you break that. This pattern right here on Bitcoin would basically just do this. It's going to do this or that, right? So like we're just going to make it simple here. We don't need to talk about EMAs here. And until you break that high here at 82,882, there's no reason to go long, right? There's no reason to get involved in a trade here. So right here, here's like your Bitcoin levels. You have 82, 77, and 68 here. This inverted hammer can turn to what? It can turn to basically this, okay? And what happens when you kind of break up here? So what I'm saying, you don't need to go long right here until you have confirmation is right here. You can kind of see when you kind of break out here. That's what I would want to see. I'd want to see this kind of, I would want us to see us, I can't talk right now. I would want to see us close above here. and form that uppercase H off that Morningstar reversal. Okay. But obviously, I'm bearish on the market. I'm not saying I'm perfect. You can also kind of just see a head and shoulders here, right? You can even see it within the EMAs here. Here's your left on your EMAs, head, and then your right shoulder hasn't formed here. So the problem I'm having also with the market is you haven't you can still come back up here. You can even still come all the way back up here. And obviously, what can you do? You can even break your head and shoulders. You can just go parabolic here. So kind of a simple way to kind of think about this chart is this. We did break our 14-year trend. That is true here. But if I go here to let's do a daily time frame. And we're going to remove our indicators because I can't even see shit. What I'm going to do here is something just very simple, trend line. So where did we start going up here? And kind of where did we crack? So we cracked actually right here. Okay, so I'm going to mark that here. So that's when we stop going up here. That's a very simple concept here. And what I'm looking for is, are we going to break this level? And are we going to actually play out our head and shoulders? Or is this going to continue up and up and up and up and up on this trend? So that's all to say what? So if I go here to the Bitcoin on the monthly time frame here, and I know I'm just talking about Bitcoin now, but I'm going to tie it back into the market with my slides, and I'll kind of just get right into it. I'm just trying to show you some just technical analysis here. So again, right here, I'm going to mark it right here. Okay, and you're going to mark that here. Now you can kind of see what I'm saying. You don't need to get involved at all, really, at all. That's what I'm trying to say. So we're going to watch that level. And basically, it's this level here. That looks like an algo level here. You can kind of just, you can't unsee it when you see it, right? My levels are we going to break here, okay? And form that uppercase H that I told you about. That kind of looks like this, right? Okay. Are we going to close below? And kind of within that sequence here, are we also going to break here at 75, right? Those are my levels for Bitcoin. That's what I'm watching. You have a head and shoulders. Everybody can see it. It's clear. And there's so many people that just get upset. You talk about how you draw trends on Bitcoin and then people say they don't work. And I'm like, okay, so then why do they work then? Almost every time, right? So they'll try to say basically a Bitcoin chart that just kind of randomly caught a bid out of nowhere, and for the past few years, they'll look at a chart and they won't acknowledge that Trump signed in legislation. And then we went up $40,000. They won't acknowledge there was a day where there's an assassination attempt where whatever, I think the market's tanked or something. I don't know if it was that one or something else, to where Bitcoin just ripped. He said something and it ripped. So they say lines don't work when they work, right? And then they won't acknowledge that whatever theory they have is irrelevant because Trump basically just tweeted something. That's in the market we're in. Okay. So where does this kind of all tie back into the NASDAQ? Kind of where am I going with this? I think that we are oversaturated. I think that people don't have money, and I think that we're being gaslit 2021, kind of the COVID stuff going on 2020, where you had all these commercials brought to you by Pfizer, right? They had fuck you money, or excuse me, they had rich money, and now we're in a space where you have fuck you money. So what's kind of interesting? You kind of have all these athletes, all these people advocating. There's certain demographics I feel they really target, and I'm not trying to say anything about that. I'm an African American and I'm Hispanic and white, maybe Asian too. I don't know. I haven't done a 23andMe, but what I really think is that they always seem to just get these people in the market who really just try to pump these things, and it just feels like X liquidity, right? It kind of feels almost criminal, right? And so, we go over here to my report here. So, what I find fascinating is this. So kind of my oil thesis, and I really want you to understand this because everything in the video flows into this one concept. Trump has said he promised to bring oil prices down. And I really want you to think about that for a really good second. Really think about it, because I promise you, whether he succeeds or fails, is going to lead to the same exact place, and that place is a what? Recession, okay? So let me explain what I mean by that, because I think a lot of people hear recession, they like glaze over. They're like, "Oh, this guy's retarded. He's talking about recession." I'm like, no, stop. Like, just relax. So scenario A is what, right? Oil goes up, Iran escalates, and we're going to spend a lot of time on why I think that's coming. Oil surges past this triangles pattern that's been building, right? We have the CPI report come out, right? And the PPI report, they were like bullshit. They were a fucking dumpster fire. It was terrible. So I'm not gonna really go over that. I don't think that's important. Like, you can do that on your own time. The numbers were like they were really bad, and I really want people to understand that. Okay. And so basically, if oil goes up, inflation reignites, yields spike. And when you kind of go over the 30-year yields here, let me clean off my charts here. So we have the 30-year yields here, right? Okay, my computer's frozen. I can't move my mouse here. Please work with me. Please work with me. Okay, here we go. Right, so when oil goes up, inflation reignites, yields spike, and we're going to talk about why the 30-year closing where it did on Friday is a massive deal that nobody's paying attention to, okay? The Fed is completely boxed out because you can't cut rates when inflation's running hot. The economy tips over, literally the market crashes. So that's scenario A, okay? Scenario B is where it gets more interesting, right? So scenario B is, right, oil goes down. It only falls through the demand of destruction. Demand destruction is recession. Economy is already dying. Oil falls because nobody's buying. By the time oil's down, we crash. And this is just so funny because nobody's saying we're in a recession. But I just went to Chipotle the other day, and by the way, somebody, like, I gave him money to pay for his burrito. This motherfucker didn't even say a thank you. I'm just like, so we're cooked as a generation. Because people don't even think it's appropriate to say thank you when you're paying for their meal. I didn't have meta glasses on. I wasn't filming it, right? I wasn't doing anything weird. I just paid for his food because his shit kept getting declined, and I kind of wanted to get out of line. I had a lot of, anyways. So I found that weird, okay? And so scenario B is where this gets interesting. This is the part I don't think people are getting. If Trump somehow succeeds in bringing oil down, it's great, right? No. Ask yourself this question. Through what mechanism does oil actually go down in this environment? Think about it, right? Is OPEC going to flood the market? No. Is Iran going to suddenly start pumping more oil while they're getting bombed? Obviously not. Is there some new massive supply coming online that I'm not aware of? No, I'm not aware of anything. Okay, so the only mechanism through which oil prices collapse in this environment is demand destruction. Here's the key: demand destruction is a recession, and by definition, when oil fell from 147 to 33 in 2008, right? Let's pull up crude oil here for a second. Okay, maybe the wrong chart here. I'm not going to get into it. So when oil fell from 147 to 33 in 2008, it wasn't because somebody found more oil. It was because the global economy was collapsing. Nobody was buying the stuff. The price went down because demand evaporated, man. And so the demand evaporated because we were in the worst recession since the Great Depression. So if Trump wins and oil crashes, ask yourself, why is it crashing? Well, it's crashing because the economy's dying. The oil drop isn't the cure. It's a symptom of the disease having already run its course, right? And so here's a slide here that just kind of shows you the 100% recession rate here, right? We have the crisis, the embargo, the revolution, the Gulf War, the financial crisis, right? And what happened, right? So I really can't emphasize that enough. So if Trump wins and oil crashes, ask yourself, why is it crashing? Is it crashing because the economy is dying? Right? The oil price drop isn't the cure. It's a symptom of the disease having, again, already run its course. That's the paradox. Oil up, recession. Oil down, also recession. There's no exit from the trap. Now let me prove to you that this isn't just some random like blah, 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 blah. Right here. Okay? So the 1973 Arab oil embargo, oil goes up 300% and the S&P drops 50%. The recession lasted 60 months. The 1979 Iranian Revolution, this kind of feels like one. Oil goes up 150% and the S&P drops 27%. Recession. Well, actually like a double dip. And it lasted 18 months. And then the 1990 Gulf War, oil goes up 135% and the S&P drops 20%. The recession lasted 8 months. Okay. 2008, oil goes up 194% to 147. S&P drops 57%. The recession lasted 18 months. Every single oil shock in the past 50 years produced a recession. Not most of them, not 80% of them. Every single fucking one of them. Zero. There are zero exceptions to this pattern. Zero. So I also want you to add one more. Again, apologize. I don't really like these YouTube videos. And I also want to add one more layer here because Trump faces what I feel like I'm calling like a trilemma. He has 3 policy objectives: lower oil prices and have aggressive military posture towards Iran, and also avoid a recession. You can pick 2, but you can't pick 3, man. It's physically impossible. Right? It's physically impossible. And so we want to lower oil and also be aggressive on Iran. So the military conflict drives oil, prices higher first. You get your recession through the demand destruction loop, and then oil falls. You get lower oil eventually through a recession. So we want to lower oil and also avoid a recession. We want to also de-escalate with Iran, accept a nuclear deal, reduce the risk premium, but Trump has shown zero willingness to do that. You honestly will, again, get a lower oil eventually through a recession. So, I mean, he's going to get what he wants, but nobody understands that. And I think because we keep buying the dip, I think because the market's just done this since 2010, we got into an environment to where, like, people just don't believe it anymore. It's hard to believe it, even for myself. When you go here to, like, when you go here, like, to the 1 month here, it's pretty hard to believe, right, that we're ever going to have a pullback here. Even basically right, the market goes up because we have growth. But really nothing innovative has been put out here. All we have is like fucking chat robots that still need supervision, that can barely answer questions. Like, where's the proof in the pudding? Where's the actual stuff here? I have a report that I'll put out and maybe link in the video. It's the Micron stat sheet. It's literally feast or famine. Famine. It's feast or famine. So, like, even when you pull up Micron, their own words is like they literally have feast or famine, right? Why do you think they didn't go up at all? The only reason Micron went up is because we have this quote-unquote demand for data centers, and I get it, right? So what happens once those data centers are quote-unquote kind of met and built? Because they're not just going to, like, someone might try to tell me they're going to just basically build data centers at every square inch. I mean, maybe. And some weird dystopian type shit. Right? But when we clean up the chart here, right? It's feast or famine. Feast, famine. Feast, famine, right? Maybe a little bit of feasting here, famine. Feast and famine. Now we have like a mega feast here that we'd never seen before because we have all these data centers. That's bullshit. So you're telling me the business model is so fragile that all of a sudden, if demand drops, right? Because they keep saying microns and everything, the chips, the computers. I'm like, okay, so then what happens when people can't afford the phones anymore? Because that's a real thing. Famine, right? And also we have like restricted supply, right? So another kind of weird concept is like, what happens actually like when the global market opens up for chips, right? You also have China competing for chips. I don't know why China would open up like their exports, but like, what if we start selling chips for them? Everyone's like, okay, more revenue and this and that and this and that. So like, I definitely get that. But at the same time, I don't think we're understanding then there's like dilution. There's just more out there. So now everyone has more access to it. It's not scarcity, it's supply and demand, right? Well, now the demand's going to diminish. Why? Because it's a free market. Oh my gosh, it's not scarce anymore. We can actually get Micron chips here. Okay, maybe we can actually wait a bit longer here. I'm just telling you my thoughts. You don't have to agree with it. I'm not saying I'm right. I'm just telling you how I'm thinking right now. And this is off the top of my head. This isn't a script. This is just free flow. Okay? So the next thing I really want to get into here is the bond market. This is the big one. And so where I really want people to pay attention to this is because I have a real problem with what happened on Friday. I don't think people are trying to truly getting this, and it's very important. So again, back here to the 30-year yield, right? I want to explain why I care about this, and I feel like why normally this isn't something, well, it's not something I watch a lot at all. Candidly, I will just watch other videos and little shorts and stuff. I'm like, okay, like I probably should just do some more research on this. I'm not a bonds expert, I'm not claiming to be one, but again, ball don't lie, charts don't lie, bonds don't lie, right? And so why I do care about this, and it's because again, it's something I don't normally watch, and I'm not like, what is a 30-year yield doing? It doesn't really usually do much, right? You're up and you're down, like and you're not really going anywhere. Like we haven't really gone anywhere. It's just so slow. It's like the Dixie, it just moves so slow, right? And so we're here on Friday, and we broke that 5% level that I marked here. And that's a very big deal for me. So maybe go to let me just go to the monthly. It might show a little bit better here. Okay, there we go. So that 5% level, I think is just very important here. You can kind of see what happens when you're on that 5% level, when you're above that 5% level, when you kind of go above it here, right? Kind of .com, I don't know, right? 2007, right? I think 2023, right? What is this? Is that April 25th? Is that the liberation type deal? I mean, kind of here, but we obviously kind of just had divergence. We just ripped up here. Again, not saying I'm a bonds expert. I just like to look at the chart. Charts don't lie. Holy crap, there's like a wasp right near me. Get away from me. Oh my God, there's a fucking wasp. Jesus, where the fuck did that come from, man? Whoa. It's like blue. That thing probably gonna kill me if it touches me. And so I think the difference between an intraday spike and a weekly close, an intraday spike can be driven by like thin liquidity, somebody hitting a stop and kind of momentary panic. I think it's just noise. But a weekly close here, a weekly close like this, right here, weekly close, and that's a massive bullish bar, right? Which is bearish for the market, right? That's the reason why, basically the reason the weekly close matters because it's a lot of what institutions are kind of doing. So institutions kind of rebalance their portfolios within the week, and that's why kind of on Friday closes are very important. There's also people that kind of just look at like, the last kind of like few hours of the market on Fridays to kind of make the determinations about like what's actually happening, which actually isn't like a bad idea. So on Friday, they were obviously doing what? Selling bonds. And they're selling bonds based upon the data with the PPI and CPI. And that's just the fact. So since we're on the weekly chart here, right? And I just kind of showed you what happened, kind of like back then. That's concerning. Am I saying that that's exactly what's going to happen? I'm not. But I just think that's something we really need to be cognizant and pay attention to. Let me explain, I guess, I feel like what this means. Bonds insurance is not something you or I buy. It's not something that real like traders kind of like dabble in. Bond insurance is purchased by institutions that manage hundreds of billions of dollars in kind of fixed income assets. These are the smartest, most disciplined risk managers in the world. They have risk models and it costs them millions of dollars to build. So on Friday, those risk models told them, buy protection now. That's like somebody buying fire insurance on their house because they smell smoke. They might be wrong. The fire might not come. They might just need to get like a new nose or something or whatever, have surgery. But the fact that they're willing to pay kind of a significant premium amount on a Friday means that what? When they're rebouncing, right, that should make every single one of us sit up and pay attention here. So there's like an equity risk premium. So let me teach you this. So I want to explain that I think the most important concept of the entire video is the equity risk premium. Because when you understand this, you'll understand why institutions sell stocks. It's not emotion, it's not fair, it's just fucking math. So let me go back here. So right, 5% year, worst close since July 2007, right? Bond insurance bought by Friday, smart money hedging, negative equity risk premium, first time in 20 years, bonds over stocks. Equity risk premium is S&P earnings yield minus the 10-year. When negative, institutions mechanically rotate from stocks to bonds. It's more safe for them, obviously. It's not an opinion, it's math. Bonds pay more with zero risk. So we also have that kind of yield curve that we're going to talk about here. Whoa. So it's kind of like a very simple calculation. You take the earnings yield on the S&P 500. That's just the inverse of the PE ratio, price to earnings. So if the price to earnings is 20, the earnings yield is 5%. Then you can subtract the 10-year treasury yield. That's the difference in the equity risk premium. So I feel like, why should you care about this? Because the number tells you whether you're being compensated for the risk of owning stocks versus the safety of owning bonds. When the equity risk premium is positive, let's say like earnings yield is 5%, and the 10-year is at 3%, the stocks are giving you 2% more than bonds. So there's an incentive to own stocks. You're being paid to take the risk. When the equity risk premium is negative, this is where we are right now. It means bonds pay more than stocks with zero credit risk. You're lending money to the US government. It doesn't get safer than that. And now it pays more than earning yields on the S&P 500. So if an institution managing a pension fund or an endowment and you can get a better return on bonds with zero risk, why would you own stocks? You wouldn't, and you don't. You rotate mechanically and automatically. So this just went negative for the first time in over 20 years, and this is the lowest level we've had in over 2 decades. And it's not something because of earnings were bad and this and that. Earnings are actually, I think, fine, even though like they're bullshit and kind of made up. But it's because the 10-year has gone so high that it's now competing with the S&P's earnings yield. Great earnings don't matter if the bond markets offer more for zero risk. This is the kill shot. Start watching this number. You also have the Fed's balance sheet. It's a contradiction. So now we're going to talk about something that's going to blow your mind. We keep hearing that the new Fed chair, Warsh, is supposed to like lower the balance sheet. And let me show you the balance sheet if it would, right? So we keep talking about how, Warsh is going to like lower the balance sheet. But they've been increasing the balance sheet despite whatever they're saying. So the balance sheet's increasing, but Warsh is supposed to lower it. Well, they can't cut rates. The PPI and CPI, they're dog shit. We can't reduce the balance sheet. We're already going up. We can't control the long end. 30-year levels are at 2007 levels. The market doesn't believe them. And foreign holdings update Monday. Watch China and Japan. They have selling signals. They're selling. I think I just read a report earlier that we're selling. Japan was selling U.S. I need to fact check myself. Bonds. Let me check some here real quick. Japanese investors sold the most U.S. sovereign bonds in almost 4 years of net sales debt issued by the U.S. government agencies and local authorities that totaled 4.67 trillion yen, which is about $30 billion in Q1 of 2026, and it's a high since 2022, according to Japan's balance of payments data. And yes, Japan remains the largest foreign holder of U.S. government debt at roughly 1.2 trillion as of December 2025. So that figure trickled up to $1,239. Wow. $1,239 billion by February of 2026. So Japan isn't liquidating its entire portfolio, but the Q1 selling was significant and accelerating. And I think that really matters too because Japan's finance ministry is estimated to have spent around 54.7 billion on intervention to support the yen. And the decline of the treasury holdings is consistent with the possibility that Japan sold U.S. government bonds to fund that intervention. So it's a parlay currency defense move, not purely a vote of no confidence or the structural trend of rising Japanese domestic yields. But they're pulling the pulling of capital. It's real. So basically, what Japan investors are some of the historically most aggressive buyers of overseas debts. And now they're more likely to stay home and invest in their own home bonds as domestic yields rise, putting pressure towards U.S. rates. Okay. So you can't cut rates when PPI and CPI are dumped fires. You can't reduce the balance sheet when you're expanding, and you can't control the long end when the 30 years telling you the market doesn't believe them. And here's the other piece. The foreign U.S. Treasury holdings data gets updated on Monday. We always hear the same thing. Japan selling, China selling. There's always a move around. I pulled the last 90 days so you can kind of see where you're at. It's in a report. Click the link in the bio. Okay. More supply, less demand. Yields go higher. It's just math. It's simple. We also have the long end breaking faster and kind of why it matters. So, I think that it's really nuanced, but it's super important. If we just look at the 10-year, we're not just hitting a higher high, but on the 30-year, we are. So the long end is breaking out more than what we're seeing on the 10-year. And I think it matters because the long end is telling you more about what's actually going on than the short end. The Feds can influence the short end through the federal funds rate. They can't control the 30-year. The 30-year is determined by the market, by supply, demand, inflation, expectations, the risk premiums investors demand for lending the government for 3 decades. Okay? So when the 30-year breaks out aggressively, like we just talked about, it's a market saying, we don't believe you. We don't believe inflation's coming down. We don't believe you're going to reduce the balance sheet. We want more compensation for the risk. We also have the Samsung strike, again, that nobody's talking about, right? Still nobody's talking about. So I want to spend a lot of time on this one because I covered this extensively on the 10th. I talked about it, live stream, shared it with my Discord. Right? And so basically, Samsung Electronics and the South Korean labor union will resume pay talks on Monday morning. A government mediator is involved, and the only thing that's really changed is that Samsung replaced their company representative for negotiation. So very clearly, somebody in there was not working kind of towards a resolution and got rid of them. So the Samsung Electronics chairman, and this is the first public statement he's made on this, apologized to customers and in public over the labor dispute. His exact words were, "I apologize to customers around the world for causing anxiety, concern, and issues to our company." This was like his first public remark. Kind of a weird, I guess, balanced apology. So I guess maybe there's something to kind of be said about that. Maybe they're more serious about kind of making like things kind of work out, I suppose. And so the union leader said that the new company negotiator apologized for the breakdown in trust and pledged sincerity in his negotiations. He added that he would make every effort in Monday's talks to prove constructive. It's kind of a completely different tone that we've kind of seen from, I guess, the initial talks here. I mean, again, it looks like, it just feels like they're serious. And I feel like maybe don't need to really talk more about that. I think that the question that nobody's asking is, I guess, like, if the strikes settle, kind of based on, maybe like we have more positive negotiations, well, like, what does that do with kind of like DRAM pricing, kind of just the entire market, memory market, right? So if the price goes down, more supply equals lower prices. That's just basic economy 101. It's not complicated. But I think the part that people aren't getting is, if we have a strike and we have a strike of, my chart's not loading here, so I apologize. I'm trying to load a chart here, so I keep pausing. I think I have too many browsers. I have like 80 browsers open. I'm just gonna try to clean this video up here real quick so I can drop it. Okay, here we go. Oh man, I lost a subscriber already. It's only been like a minute. That's crazy. Well, that sucks. I'm gonna end the video here. I don't really want to talk more about it here. I have my reports. Don't really feel well. It's my excuse. I think that I want to leave you with this. Don't be fooled, guys, by the people trying to tell you to go long. There's people out there telling you to buy PayPal. There's people telling you out there to buy all these stocks. There's people out there that's telling you all to do all these different things here. But they're all red. They've been red. People thought PayPal was a good buy. People thought Adobe was a good buy at 600. People thought Meta was a good idea to buy here at 800 with Ray-Ban glasses, but their earnings were dog shit. So I think we're in a market here, candidly, where I think just over the next several years, we're just going to see more charts like this. We're going to see Meta. We're going to see like more charts like Adobe. We're going to see more charts like kind of Oracle. We're going to see more charts like, Nike. You're going to see charts that do this. And I think you're just going to have a stock market with kind of winners and losers. And I think that's just the overall problem that we're in, just kind of what I'm seeing here, and why I'm just very cautious. There's nothing bullish to me about what's going on here. There's nothing bullish. There's truly nothing bullish. All you have is the same chart again and again, right? You go back here to Meta. It's like almost the same chart. Like Adobe, the same chart. They get you every time, guys. They get you every time. It's the same chart that happens again and again. Investors think this is a good buy, and they think this is a good buy, and they think this is a good buy, and they get caught. And then like 10 years later, you're still like here, right? So like people thought Nike was a great buy, but it's literally right where it was at 2014. You've gone nowhere for over a decade. And someone's gonna say, well, that's like kind of like, discretionary. That's just like people buying yoga pants. Okay, but then what about Oracle? I thought that was legit. What about Meta? I thought this was legit. You know, in healthy markets, you truly don't see stuff like this. Someone's gonna be out there trying to tell me no. What about Adobe? Adobe was legit, man. What about PayPal? All these companies, it's the same thing. PayPal was literally at like, I think like 400. So we're in a market where people are just going to continually try to gaslight you and tell you that these are really good companies and try to buy them and this and that for whatever reasons, but it's not true. You have companies like Nebius. They went from like what, $22 to really no relevance, and again, it's just data centers. So what happens when like the demand for data centers is down, right? When it's down, and it's a lot of revenue for some of these companies. It's such a saturated market that there's so many companies that are doing the same thing. I just don't know what to say anymore. My retort to you, my verbiage to you, is to sit on cash. This is not financial advice. It's just, I just think sit on cash, man. Watch from the sidelines. You don't have to get involved. You're just gonna get like gaslit to being involved, because right, if the market kind of does this, you're gonna be like, oh man, but nobody knew memory is just gonna shoot up from what, $25 to $230? That's crazy. Anybody telling you that's not, they're full of shit, man. And to kind of close of the video, all we have here, kind of with all that being said, is this. We have on the NASDAQ here, we have an evening star reversal pattern here. So we had people selling. We have companies and institutions telling us they want to go into bonds, it's more safe, right? We have on the, this is the S&P 550D moving average, lower lows here. We have here on the NASDAQ, I had the other one, where's it at? NASDAQ 50-day moving average here, right? Lower lows here. And we really don't want to see this crack below 50. When we crack below 50, we're going to have serious problems. And I really want to make that, you know, kind of clear to people. Hollow point out.